Ladies and gentlemen, welcome to the Titan Capital Partners online and in-house presentation. So for the millions of people who are watching this online and the thousands of people in attendance, we are live from Mesa, Arizona, in beautiful Bank of America building, 10,000 square foot office space at the headquarters of Titan Capital. Hello, everybody. I'm Leonard Rosen, and I'll be your host for the next hour. And what we're going to talk about today is private money lending and the associated and emerging opportunities that go along with that. And I'm happy to be part of Titan Capital as their architect of their fund, which we'll be talking about in just a few moments. For those of you who don't know who I am, I used to be an anchor on the Financial News Network, and I was also host of the Leonard Rosen Show, which was back in the 80s. I've also appeared on CNN, Fox News, MSNBC, been written up in the Wall Street Journal and so forth. But I'm not here to talk about me. I'm here to talk about my friends at Titan Capital. And I was fortunate enough to meet Adam Child and Rick Rickard at one of our national conferences. And it really was a moment for me of reflection, because Titan Capital has been around since 2009. And when I look at Titan Capital, unlike some of the other clients that we create real estate funds for, Titan Capital they already have $10 million under management. So it's not like this is their first trip to the rodeo. And we're happy to be part of this. And today we're going to be talking about opportunities in the new Titan Capital Fund. Now, what is a real estate fund and what is private lending? Well, quite simply, private lending is a part of the real estate and financial services community that lends on real estate that perhaps does not meet today's lending requirements by conventional banks. And Titan Capital has done, I think, something like 355 loans. And so they know this marketplace. They know Arizona. They know Las Vegas. And they're going to be going into California soon. And so we're really excited about the opportunities that are available. And let's say that if you are possibly interested in participating with Titan, or if you have questions as we go through this presentation, I think you have a number that's on the screen. Look at that number right there on the screen, right there. Everybody see that on the screen or on the screen? Everybody kind of see that? Okay, so if you have questions, just text them to us, and we'll be happy to answer them for you. So let's begin. You know, Titan Capital Holdings is a licensed private money lender and real estate investor in Arizona, Nevada, and California. And we brought with us today the California contact that'll be representing Titan Capital, Chip Saicon. Chip, I know it's a big crowd here. If you could just kind of come up here so I can introduce everybody. This is Chip Saicon, and Chip's going to be opening up the California office. And is that number on there? So if you have questions and so forth, just go ahead and text. Thanks, Chip. Appreciate it. Don't say anything you're not mic'd. Titan Capital provides investors the opportunity to participate in Titan Capital Real Estate Fund 1, which provides consistent and above-average returns secured by real estate. Now, what does that really mean? Well, what that really means is that Titan Capital will deploy capital in the marketplace in first trust deeds, conservatively written, and you receive a dividend yield based on what Titan Capital receives. And currently, right now, we have a target yield of 10%. Now, I don't know about you, but I like real estate because I can control it. Real estate, you can drive by it and brag about it. You can rent it, you can lease it, you can improve it. You can paint the walls, pink, purple, and polka dots, and it doesn't matter because real estate will never go to zero. And I like that because in the equities markets, stocks can go to zero. You don't have control over stocks. And Titan Capital is a seasoned lender, a seasoned professional in the marketplace. And so they understand that they work for you, the investor. The investor is the backbone behind any type of a fund. And we've done, over the years, we've done funds that have totaled over $3 billion. So we know how to create this. Titan Capital knows how to execute it. And that, I think, is really important. The Titan Capital Real Estate Fund is proud to provide a preferred interest rate to our investors at the annualized rate of 10% secured by first deeds of trust. Now, a first deed of trust means that you are in the first position. It's not a second or third or fourth, and there are funds that do that. But it's a first deed of trust. So you're in the best possible position that you could be in. And our investors' preferred interest rate is paid on a monthly basis or can be reinvested or taken as monthly income. If you have a self-directed retirement account, for example, Keogh IRA, you can deploy capital out of the IRA account and use that capital to invest with Titan. So it's not, for many, it's not a question of deploying additional capital in the market. You could take capital that you presently have in the equities market or gold and silver or whatever market you want, and you can redirect those funds in the Titan Capital Fund because this fund is able to use your self-directed IRA money. Now, when we talk about history, history is, I think, really important in making an investment. This is not the first trip to the rodeo for Adam Child and Rick Rickard. These are seasoned professionals. You know, I learned a long time ago that it's better to do less more. If you do less more, you become specialized at what you're doing and not run your business and being a generalist, but being a specialist. I remember a conversation I had with Wayne Gretzky a number of years ago, and I said, Wayne, you know, he's arguably one of the greatest hockey players that has ever put on laced up skates. And I said, what made you such a great hockey player? And it was kind of an interesting comment that he made to me. And he said, well, Leonard, he said, I wasn't the best handler of the puck, and I also wasn't the best skater. But there's one thing that I knew. I knew where that puck was going to be 3 or 4 moves before my opponents did. That's Titan Capital Partners. They understand the market. They understand how the market functions. And they have a proven track record over a number of years to prove that they know how to perform. So Titan Capital was formed in 2009. And let me make a point. And I think this is a really good point. They have almost $10 million under management, and not one client has ever lost a dime. Not one client has ever missed a payment being made. Not one client has ever suffered a loss of 10 cents. That's very important, and I think that's very important for us to all understand. So in 2009, they designed a business model that was based on short-term bridge loans to investors who were buying foreclosed property at public auction. Okay, that's how it all started. Since Titan expanded to provide more short-term bridge and traditional financing to real estate investors buying properties that are REO or traditional resale transactions. Titan provides residential construction financing on pre-sold homes and other qualified projects and will acquire real estate that prevents significant opportunities. In other words, what Titan does is they identify the challenge, they find a solution, and they take advantage of the opportunities, all with conservative underwriting standards. Do you remember what I said before? Not one investor has ever lost a dime with Titan Capital. Not one investor has ever received a missed payment for their dividend yield. That's huge. Since 2009, Titan has made more than 355 loans with 5 defaults and no loss of investor principal, which we believe is a proud accomplishment. Titan's currently under $10 million, as I mentioned. Now, it's important to understand, some people are going to say, whoa, there are 5 defaults. Well, in business, not everything goes exactly according to plan. Sometimes you run into a problem. Sometimes the borrower simply can't pay. That does happen. But because Adam and Rick underwrite, and their team underwrite the real estate so conservatively that the market would have to make a catastrophic, and I mean this, a catastrophic decline just in order for them to be break even. That is vision, and that is a strong conservative business model. And I respect that. So let's talk about vision. Titan has the immediate goal to grow to $50 million. And that's under management, the markets of Arizona, Nevada, and soon with Chip Sacon's help in California. Now, it's important to understand skin in the game. And I want you to know that Adam and Rick are putting in, let's make sure we get this, $500,000. Who did that now? Did anybody remember who did this? Dr. Evil. $500,000 of their own money into the fund. $500,000. So this is not, well, please invest in the fund. We don't have any skin in the game. No, they're actually putting their own money, $500,000 into the fund, saying, you know what? We're going to be the first investor. And we're putting in $500,000, and that $500,000 will be treated the same way your money will be treated. The same way, under the same circumstance. This is the Titan Capital Real Estate Fund 1 offering. In this offering, we have put in the actual offering document, which explains how the fund actually functions. We also put in the operating agreement and the subscription agreement, and Adam and Rick can certainly answer your questions and go over any of those issues with you, that any questions that you may have. See, because the need for short-term bridge financing for real estate investors is significant. Adam and Rick receive, you ready for this? $1 million per week in loan requests that they simply don't have the capital to fund. That's why this fund was created. $1 million a week. Now, out of the $1 million a week, you know, there's certainly going to be some loans and some opportunities there that they're going to pass on. But $1 million a week is a lot of business in terms of deal flow. That's amazing. I've never worked for or represented a lender that had that kind of deal flow. And it is very consistent. So the need for short-term finance for real estate investors is significant. And Titan's business model planned to take advantage of the opportunities, and that is exactly why call before it's 30 seconds for the first 30 people who call. No, Titan Capital Partners, that's why this was actually created. So we'll give you a Vegematic along with a slice and dicer for the first 10 people that call in. Okay? So let's talk a little about the folks that I just mentioned. Rick Rickard, he's the CEO, and Rick is a veteran of the real estate business for the past 15 years. He's been involved in more than 2,000 real estate transactions, and Rick is also a licensed associate real estate broker in Arizona. So, you know, he's not new to the business. Adam, on the other hand, has a little bit different model in terms of his history, and he's a veteran of the real estate lender, originator, and underwriter for the past 24 years. So you see, it really makes a great team. So you have the lender, you have the real estate investor, you have the underwriter. So you mix the two together. And Adam is also a licensed mortgage loan originator in Arizona. Here's our team. Ashley Child is a licensed Arizona originator. Glenn is a licensed originator in Arizona. Cole is a licensed originator in Nevada. Lisa, loan coordinator. Nikki, controller. Mark is our legal advisor. Mike is our trustee, and Mitch is our compliance advisor. This is a full team. This is not just two guys trying to figure out how to put a fund together. This is 10,000 square feet in the Bank of America building in Mesa. This is a big operation. And the opportunities, in my opinion, that are associated with this are amazing because it's conservatively done. This is not Bernie Madoff type of scheme where we're looking to provide investors 22, 24% interest. No, this is 10% interest. 10% dividend yield is the target rate for the fund. It's designed for the conservative investor. That's what it's designed for. And no one has ever lost a dime. No investor has ever lost a dime with Adam and with Rick. Our offices, as I said, the corporate home office consists of 10,000 square feet, occupying the entire second floor of the Bank of America building on Main Street in Mesa. And we also have our office located in Las Vegas, Nevada. So let's talk about the actual product. What are we actually providing our clients and to the community? Well, one product is a short 6-month term with interest rates between 16 and 18%. Now you're wondering, oh my gosh, why would people pay 16 or 18% for a loan? Well, why wouldn't they? It's a lot cheaper than a partner. Think of it this way. If I'm a real estate investor and I want to acquire real estate and I don't have all the money to accomplish that goal, I bring on a partner. Of course, he's going to get half of everything we do. But if I'm paying 16 to 18%, it's a lot cheaper than a partner, and I have control of my business. That's why people come to Titan. 12-month term is a little bit lower. It's 14 to 16%. And also, it's plus points and fees. 24-month term, 12 to 14%. And again, all of these loan products are conservatively underwritten. And a residential construction is between 12 to 15% plus points and fees. It's very simple. It's really very simple. The banks are not lending. That's just a fact. That's just the way it works. And so in order for the economy to continue to thrive and grow and provide jobs and opportunities and housing in the community, that's where the private money lender comes into play. The demand is quite astonishing. As I said earlier, Titan receives more than $1 million per week in qualified loan requests that fit our conservative underwriting guidelines. Over $1 million a week. Now, as I said earlier, not every single loan that comes in, Titan's going to fund. But a lot will. The demand comes from past and current clients, and certainly a lot of referrals. And Titan possesses a database of 30,000 active real estate agents and over 40,000 active real estate investors. Titan provides education, direction, guidance, and how to benefit using a private money lender through their training offices right here in Mesa, Arizona. And Titan has become a preferred private money lender in its marketplaces. I would venture to say that Titan is the market maker in Arizona. Titan is certainly one of the market makers in Las Vegas and soon to be the market maker in California. Because the market maker is the one who dictates exactly how the business is functioning in a particular marketplace, where we lend and where we invest. Titan focused primarily on metropolitan areas, and the reason for that is because metropolitan areas are the most conservative play for an investor. When you start getting out into the desert, and it's 40 and 50 miles out in the middle of nowhere, yeah, you could probably get that land pretty cheap, but it's going to take 300 years before that land actually increases significantly. So they stick to metropolitan areas Phoenix, Tucson, Flagstaff, Las Vegas, soon to be Los Angeles and San Diego counties. And Titan will typically take on loans in remote or will not typically take on loans in remote or outer lining areas. Now, I know a lot of lenders that do that and have done that in the past, where they'll do that loan that's way out in the middle of nowhere. The problem with, or the challenge with that kind of a business model is, if that loan does not perform, then you're stuck with some raw land or stuck with a house in the middle of nowhere, and the universe of people that would be interested in acquiring that is small. That's why metropolitan areas is a more conservative business model. Now, in this industry, underwriting and valuation are everything. It's everything. Understanding what the true value of the asset is and how much equity does the borrower have in the asset. So let me put it another way. When you get an appraisal, perhaps on your home or your condo, and the appraiser comes back and says, well, we've done a market analysis and a broker price opinion, and we've done comps and so forth, and we believe that your property is worth $300,000. That's the appraised value. But see, that's what's called the retail appraised value. That's giving a 12-month marketing time for disposition if you had to dispose of the property. Titan looks at it a little bit differently. Titan says, what is that property worth given a 30-day marketing time, given a fire sale marketing time? So if the appraisal comes at $300,000, Titan's underwriting department may say, yeah, that's fine, but we'll use that as a model. We value it at $260,000. And then they'll do their underwriting based on a value of $260,000 and not the $300,000. Now, Titan uses the standard 1003 Uniform Residential Loan Application, which gives all the information in terms of the borrower, because there's really two things that we look at. In other words, the borrower's ability to pay, they have to perform on the loan, and the value of the actual asset, because that's what it comes down to. So the loans are processed using Calyx Point software, and Titan looks heavily at the collateral, the actual asset. What is that property worth if something were to go wrong? Remember we talked a little while ago that we have 4 or 5 properties that were in default. It doesn't mean we lose money on it. It just means that they went into default, and then we take the property back and dispose of it. So when you're underwriting an asset correctly, even if you take it back, sometimes it actually turns into be a windfall. Many times that's the case in our industry. So we look at the asset, and we look at the borrower's capacity. We look at the equity and the ability to pay. Now, in a credit report basically comes down to 2 things. The character of the borrower and the ability to pay. We're looking at who is looking at borrowing money from us. Who is it? And so we want to know, do they have the character and do they have the ability to pay? That's number one. And if they don't, if they don't, is there enough equity if they do not perform on that loan? Is there enough equity in this deal that if we had to take it back, we're sitting in a good position? That's number one. The credit obviously is assessed. If somebody doesn't have good credit, that could be for a number of reasons, and there's a lot of mitigating circumstances that could affect someone's credit. But at the end of the day, do we believe that borrower has the ability to pay off this loan and perform? And does the asset that we're looking at, possibly lending on, support the valuation? That's what it comes down to. And the other is the exit strategy. Private money loans are not intended to be long-term. They're just not. That's not how it functions. They're not 30-year loans, amortized, and it doesn't work that way. private money lending industry is based on fixing a problem today. Well, sometimes that problem is that the investor needs a loan in order to do a rehab, to acquire the real estate and do a rehab, and the exit plan is to sell the property. And Titan will look at all of those aspects and determine, is that a good business model for this particular situation? But Titan does require a 20% minimum deposit on costs and a minimum of 30% equity position. So we want our borrowers to have skin in the game. If you don't have skin in the game, we're not the right lender for you, and it's not a good fit. And that's okay. Not every loan that's going to come through Titan is going to be something that we're going to lend on. Not every loan is going to be the loan that is absolutely perfect. Not every loan that comes in is going to be something that we're interested in, and that's okay. We're going to choose what the right assets are, and we'll deploy the capital once we feel it's a conservative investment. Now, how do you determine valuation? Well, if you know your market, that's one thing. And we talked about specializing rather than generalizing. And so when you specialize, you know the markets in Phoenix, you know the markets in Las Vegas and in Flagstaff, and you know those markets. But we also will do what's called a comparable market analysis, a CMA. We take a look at the entire market, we take a look at exactly where that asset is located, what other properties have been sold in the recent periods of time, and so forth. We'll also then look at getting a broker price opinion. We'll actually hire a broker. So, okay, Mr. Broker, you know that particular area, for example, in Scottsdale, or in Phoenix, or in Las Vegas. Tell me what you think based on actual numbers that have sold in that area, not properties that are listed, but have actually sold in those areas. Tell me exactly what did they go for and they're comparable to this particular property. And then, of course, a full appraisal. And Titan will often use more than one of the above valuation methods. That's just common. That's just kind of the way that works. And in the entire process, in the entire fatal flaw review process that Titan uses, every loan goes through the entire same underwriting process. We don't move on to step 3 until step 2 has been cured. Okay, we've got the broker price opinion, and from there we'll take a look, and then we move down the line. All loans go through the same type of loan criteria process. Now, anybody who tells you there's no risk in making an investment is pulling your leg, because that's a fact. You could buy gold today and go down tomorrow. You could buy Apple stock today or Google stock today, and it could go down tomorrow. That's a fact. That's just a function of the way investments work. There are no guarantees. There's no guarantees that you're going to wake up tomorrow. Let's get real. So there are significant risk factors made in any investment. So let's talk about those for just a moment. Loss of income from the borrower. Loss of income arises when a borrower fails to pay interest due on a note. That happens. That happens. Good people sometimes lose their jobs, and they can't perform on their loans. Now, I think if we take a look at the unemployment rate today versus where it was 4 or 5 years ago, I think in most markets the real estate market has come back and come back strong. People are working. But we're going to take a look at, when we underwrite a loan, how long has this particular borrower been on the job and what their history is and so forth. But that is a factor. The other significant risk would be loss of principal could arise from a catastrophic move in property values. Catastrophic. More than 45% value, which would be enormous. But most of Titan Capital's portfolio is lent out at a 55% loan-to-value ratio, which means that the market would have to drop. Ready for this? Not 10%, not 20, not 25, not 30, not 40. It would have to drop 45% just for us to be even. Just for us to be even. In my opinion, that's not going to happen. But you need to assess that for yourself. Note that our current loan portfolio is 55% loan to value, which means extremely conservative in our industry. There are many lenders that are loaning at 65 to 70% value. Titan understands that Titan works for you, the investor. You are who we answer to. Titan understands that. And Titan has never, ever had one penny lost to any investor they've ever invested with Titan. Not one dime. And many of our borrowers put more than the minimum required to reduce their cost of leverage. But the fact is that in their entire loan portfolio of the $10 million under management, it's at 55% loan to value. That's unheard of in our industry. Just so you know, that's unheard of. 65, 70, and even 75% is the norm in our industry. And that's why I got involved in Titan, because I like the idea that Titan is very conservative in nature. They get it. They get it. That the way they've built their fund, their business, their model, is to make sure that if something does happen, we have so much room there that no one's going to get hurt. Security is everything in our business. Valuation and security are what makes a fund work, which makes a fund grow. First position deeds of trust. There are some lenders that do second positions, thirds, fourths, and I also know some lenders that will do a fifth position deed of trust. First position deed of trust only. That's the deal. First position. That's it. It's the best possible position you could possibly be in. It's accompanied by a promissory note. It's all title insured. Sometimes they'll do a cross collateral on another piece of property just to ensure the fact that Titan's investors are protected. Of course, there's hazard insurance, and the notes are basically short-term in nature. They're not designed to be long-term plays. Of course, there's taxes, insurance, and special assessments on the short-term loans, which are 6 to 12 months. It's paid up front for the term of the loan. On the longer terms, it's impounded. That's conservative. That's the way it's supposed to be. That's why Titan continues to grow. That's why Titan has $10 million under management. Now, in this document, which is the actual offering document that we helped Titan create with the help of John Hornick, attorney at law out of New York and New Jersey. John has an office in Trump Plaza on Madison Avenue. I think it's Madison Avenue, and also Freehold, New Jersey. John is also a real estate attorney, and he's the mayor of Marlborough Township, New Jersey. John did the legal docs on this. I worked with John on this. John did the legal docs on this. And he created the actual offering, the operating agreement, and the subscription agreement. So the offering in this package here says, what is the function and the purpose of Titan Capital Fund? What is the purpose of it? What does the investor receive? What kind of dividends do they receive? What are the risk factors that are involved? It talks about all of that. And then you have the operating agreement. And the operating agreement is that Rick and Adam are putting in $500,000 of their money in, just like you, treated the same way that your money is being treated. And so we have the fund, and then we have Titan Holdings. I think we use Titan Holdings as our fund manager. Is that correct? TCH Management. Okay. And there's an operating agreement. And what that operating agreement basically says is that based on the offering document, based on everything that's in here, the management company has access to those funds to deploy on behalf of the investors into the marketplace. A subscription agreement is just the same kind of subscription agreement or similar to a subscription agreement. Say subscription agreement 10 times real fast. Come on, say it. Come on, say it. Everybody online, all the millions of people online. Okay, all right. You can't do it. After 3, it's over. So a subscription agreement basically says, how long you're going to deploy the capital into the fund, and so forth. You'll receive quarterly reviewed financial statements, annual audited financial statements. Everything is completely transparent. Nothing's hidden. Everything is completely transparent. So I guess what I'm saying is I think this is, I like to use unique opportunity. I think it's a unique opportunity, and I feel very fortunate to be part of this. At our last conference in Las Vegas, Adam actually spoke at the event. And matter of fact, I'm going to get you folks the clip on that. I actually have it now. It's all been edited, and so all of the stupid things Adam said on there we took out. But no, I'm just kidding, obviously. But did you have some questions, Adam?
Leonard, we had a couple questions come in. One question is how long is the investment for in the fund?
Okay, the question is how long is the investment for in the fund? 1 year. Okay? Simple. Come on, challenge me. Come on, give me a tough one.
There's another question here. How liquid is the investment? In other words, can I make withdrawals?
Well, you know, you can make withdrawals on the fund. You know, it's based on a couple of things. It's based on the subscription agreement, and it's also based on the ability for Titan to deploy the capital to you, because many times this is deployed in the marketplace. So this is not like putting money into the bank. It's more of a longer term investment. When I say longer term, it's not 10 years, 15 years, or 20 years. What's the lockdown period?
12 months.
Yeah, 12 months. It's 12 months. So after 12 months, you can get your capital back. I mean, a lot of funds that we do, they use 3 and 5 year lock-in periods. This is 12 months. And quite honestly, if an investor's not willing to deploy capital for a 12-month period of time, this is probably not the place for you to do that.
And you may have addressed this with the reporting, but what reporting is provided and how can I monitor my investment?
Okay. The question is how can I monitor my investment and the reporting? You want to actually answer that? You want to help me answer that?
Well, you addressed it with the quarterly and the...
Oh, I see. That. Okay. Well, there's a quarter review financial statements that you'll obviously receive, and then at the end of the year, we get our audited financial statements. So, I mean, we keep you up to date every 3 months with all the information regarding the fund.
And is it the appropriate time to talk about the software that we're implementing?
Okay. We're just about to deploy the gold standard in software, and I didn't want to bring it up today because it hasn't happened yet, but I believe it's going to be happening in the next week or so, which is ABS, the mortgage office software, which is the gold standard of software. So you can be chilling in the Caribbean on a yacht, and you can go right into your account, and you have complete access to everything that's going on in the fund and your particular investment. That will be implemented, and I think by next week. And we didn't want to take it on too soon because it's a big project for our entire office to get familiar with the fund, and we're launching the fund. But we've done, you know, hundreds of billions of dollars worth of funds, and every fund uses the mortgage office software. It's amazing. I mean, it truly is amazing. And we would invite you to contact Adam and Rick, I think after next week, for a demo on it. Because it really is a very useful tool for investors.
And the other one here, Leonard, is what's the minimum investment in the fund?
Minimum investment in the fund is $10,000. It's real simple. It's $10,000. So you can deploy that outside of your self-directed IRA or KEO or your retirement plan. You can use it within your IRA. So as I said earlier, you can redirect the funds from your IRA account. Let's say you have X amount in mutual funds, and you take out a certain portion of that and redeploy it into Adam Capital Fund or Titan Capital Fund. Yes, I mean that's very common, by the way. So $10,000 gives you 1 unit. So basically, the way that works is because all the investors are pooled together. You own a pro rata share of every deed of trust that they invest in based on your participation in the fund. So if you have one unit of $10,000, then you have one unit. Maybe your friend may have 3 units, your other friend may have 5 units, and we may have an investor has 10 units, but based on your participation in the fund, you receive those dividend yields. And so obviously, from a Titan perspective is we want you to grow that as much as possible, and we're all in this together. And so it's $10,000, which is a very small investment. We've done funds before that are $100,000 minimum investment. The standard on real estate funds, it's kind of like mutual funds, depending on how good the mutual funds is. It ranges anywhere from $50,000 to $100,000. Well, we believe this, that we are open to the smaller investor, the medium-sized investor, and also the large investor. And the small investor, we want to help you grow. And we believe that if you're with us over a period of time and understand how our office works, how everything functions in the office, and receive your dividend checks, of course, obviously on time, what will happen is you'll feel more comfortable with us. And we welcome that challenge. We welcome the opportunity to prove to you that we're here to work for you. Any other questions, Adam?
That's all I have right now, Leonard.
Okay, so if any other questions, we have that number right there. I'm hoping that number's there. I'm not just doing this and making myself really look like an idiot. It's there? Okay. It's there. Okay. My technical director says it's there. So why Titan? Well, because we're really good guys. That's why. Let's start with that. Look, we have the team. We have the team. We're proven. We're time-tested. No one's ever lost a dime with us. How many investors can say that? How many lenders can say that? No one's ever lost a dime. Since 2009, no one's ever lost a dime. 355 loans and no one's ever lost a dime. 10,000 square feet in the Bank of America building in Mesa. Come on, let's get real, son. We have the experience. We know our market. We may not know South Florida. We may not know Manhattan or Minneapolis or Denver, but we know Arizona, we know Las Vegas, and we know Southern California. That's what we know, and that's what we're good at. The marketplace has a huge demand that's clearly being underserved. When we have $1 million of loan requests that we cannot deploy the capital because the capital is not there yet, that proves to us that the marketplace demands our product. The security, first, deeds of trust. Not seconds, not thirds, not fourths, not fifths. First, deeds of trust. Return on the investment, 10% dividend yield. Target rate of 10%. Now, I don't know, am I right?
On that, I just had a question.
Yes.
Can the dividend distribution be reinvested?
Okay, you have two options. That's a great question. Can the dividend be reinvested? You have two options with your dividend. One is you can take it as income, which some people do. Some people who are older, who are using their investments and the dividends from that to live on, yes, you can take it. Or you can take it and reinvest it back into the fund to help your contribution grow. Or you can do a combination of both. You can do that. So we believe the return on the investment is solid. No, it's not Bernie Madoff type of 22, 24% promises. We don't offer that. If you're looking for that, you're probably on the wrong live stream. This is for the conservative investor. This is for the investor that wants to make sure that their money, the hard-earned money that they've earned and saved, is secure in first trust deeds with a proven team, with people that know their business and know their market, and no one's ever lost a dime. We have the track record. That's proven. Come to our office. We'll show you the books. We'll open them up to you. We'll show you. Talk to other investors who have invested with us. We have the support systems. We have the compliance officers. We have the underwriting team. We will soon, next week, have the software in place. We have it all. Our qualifying process and underwriting criteria I cannot say enough about, because it's really based on the most conservative values in our industry. And that's, I think, really important. Very, very conservative. To initiate your investment, you call our corporate office here in Mesa, Arizona. You can certainly contact Adam Child, the president, Rick Rickard. They're both great guys. I work with them. They're great guys to work with, very approachable. I know that some people feel, well, you know, they're president and CEO of this big company, and they've got, you know, a lot of things going on and so forth, and I feel uncomfortable about approaching them. Hey, you know what? These are good guys. These are good guys. You know, I welcome you to come down to our offices and take a look. Meet with our team. Look at our books. Talk to our investors. You can also go to our website, TitanCapitalHoldings.com. You can certainly, you know, contact Rick or Adam. Actually, we should have up here the email addresses for Adam and Rick. Adam, what's your email address?
It's just the name of Titan Capital Holdings. So Adam at Titan Capital Holdings, Rick at Titan Capital
Okay, so if you, okay, good,
and
great.
everyone is the same.
Okay, so if you want to contact anyone in our office, Adam at TitanCapitalHoldings.com, Rick at TitanCapitalHoldings.com, and, you know, we'll certainly get back to you. Before we sign off, are there any additional questions? So get on your little cell phone and start typing. And by the way,
That's a good question.
okay, yeah, there's some great questions. By the way, tonight at 6 o'clock, we'll be doing another presentation. Next week, we're going to be doing the same thing. And so if you have friends or colleagues or folks from church and friends that may want to listen to this, by all means, you know, contact Adam or Rick and you know, sign up for the live broadcast, or you can also come down to our offices. Okay. So if there's no additional questions, I thank you all for joining us today, and we'll be back at 6 tonight. Thanks again.